Welcome to Drill Down Earnings. We have quarterly results from Synopsys. This is the first quarter 2026 fiscal year from Synopsys, but this is the business story about one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology, and certainly Synopsys is one of those. And this was a little bit better than Wall Street estimates, a little bit better than my estimates too. 1.45 billion in revenues. The company did 1.46, a little bit better than the street expected. And earnings were a lot better, $3.03. The street was looking for only $2.79, but that just tells you the street was wrong. Let's look what the actual business did. So revenues are tricky to look at here. You got to follow the company carefully, or at least have some kind of memory here to remember that they actually sold their software integrity business. So the revenues are down 4%. It was actually a good quarter for this company. Synopsys is one of the two giant companies, Cadence the other one, that sells software to help design semiconductors. So every semiconductor out there, every major semiconductor company is using Synopsys software to design the next greatest thing out there, but increasingly using it to design all the systems around those semiconductors, and indeed entire systems as well, which is why we wait for the acquisition of Ansys, this company, this about $35 billion acquisition that Synopsys is trying to complete here. Now, when we look at the business here, we look at two businesses, design automation and design IP. Now, design automation is really interesting, but that's their main software business. It's been like that for a long time. Design IP is super interesting, although it's only 31% of revenues. That's selling sort of chunks of software that customers can license. So it really helps designers get ahead in a process of designing super complicated stuff like these chips. Synopsys has sunk lots of money in the design of these chunks of IP. And although it's been very lumpy, and this time was on a year-over-year basis down 17%, generally the trend is up with that business, and we would expect a lot more of that. Because we've seen really nice things out of Synopsys here, with new leadership as a new CEO now with 1 year under his belt, beating consensus and guidance numbers with the numbers out there, really important to gain the trust of Wall Street. And it's this resilient and stable business model tied to the money they spend on R&D, creating these things like these IP processes. And specifically, these really advanced nodes, these advanced AI chips require so much more time and design and really require this software. And as the pace and complexity of these designs increases, so does the need for Synopsys software. Specifically, we saw some new chunks of software, new pieces out here. We saw Ultra Ethernet and UA-Link IP, which is used for scaling AI infrastructure. Again, AI infrastructure, not just the AI chips. That's what's using the Synopsys software, and that's been super strong in this quarter. As well as their just basic EDA software, electronic design software for components. They're expanding the capabilities there, which is going to ultimately expand their customers who can use this software. And they also launched, this is super interesting, we're going to dig into this more tomorrow, I'll tell you why in a second, hardware-assisted verification solutions. So they actually make these giant machines that will simulate a new semiconductor before someone makes the semiconductor, helping avoid mistakes and millions, if not hundreds of millions of dollars in losses, because they can see how a chip's going to work before the chip has built itself. So how did the stock react when these numbers came out? Initially it popped really high, settled in a little bit, ultimately up 3% for the after hours trading, which is good given that we've seen an 18% decline in the stock in the last year. Now the numbers, certainly top line numbers and profitability numbers, are going to change a lot once this merger goes through, and it looks like, hopefully, maybe for Synopsys' sake, all signals are go with this Ansys acquisition. Indeed, they say that will be completed in the first half of this year. Now, one of the questions going on to Sassine Ghazi, the CEO of this company, is how long is it taking your customers to buy the software, design some stuff, and then buy the next software? And does every single chip have to have its own roadmap? And the answer kind of is yes. And with AI, that's happening faster. But maybe with auto and mobile, it's happening a little slower. Here's Sassine Ghazi. Here's what he had to say.
For the way Synopsys engage with semiconductor companies, we engage on pretty much every single chip they have on their roadmap. So our observation and insights is based on the following. When a customer is designing a chip, say within a window of about 14 to 16 months tape out, meaning before they hand it over to the foundry to manufacture, are we seeing a shift to the right of that roadmap? And that's what we classified as that tale of two markets, where if you are in AI HPC, they're going from 16, 18 months development down to 12 months. So it's a significant acceleration. For the consumer electronic market, as well as auto industrial, for a period of time, the roadmap was not being fueled by the opportunity to accelerate. So that we observe it through our IP pull down and the pace in which they move to the next project on their roadmap. We are seeing absolutely the pickup in the mobile and PC. And when it comes to auto and industrial, I want to say there is not much change compared to what we've seen over the last 4 quarters or so. But it does not mean they're not investing in their roadmap and they're not building chips. But the pace in which they're developing and releasing, it's not with the same pace and acceleration.
All right, what's it all mean? What's your drill down earnings takeaway of the earnings from Synopsys in this quarter? And what's your kind of the number you want to remember? Well, here it is. So Q1 2026 numbers out from Synopsys. Well, top line numbers were down because they sold their software integrity business and they've yet to complete this massive acquisition of Ansys. It was a pretty good quarter, $1.455 billion in revenue. But that's better than their guidance. It's better than Wall Street was expected. It's kind of right in line with what my expectations were. That just tells you something about the analyst. It doesn't really tell you about the company. But the company is shipping a lot of product that seems to be resonating with customers. Ultra Ethernet and other stuff to help AI systems, not just AI chips, but AI systems, connect with other AI systems in the data center, as well as new hardware-assisted verification solutions, which we will dig into when we interview the CFO of this company tomorrow. Fascinating company and an important time for them. A great interview with Sheila Glazer, one of the really interesting CFOs in Silicon Valley. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.